Over the years, you've heard me ask wealth manager Warren Ingram the big questions. How do we invest wisely? How do we protect our family's future? All those conversations, that entire library of financial expertise is now available as a podcast. Straightforward advice to help you build your wealth on demand. Just search for Warren Ingram's Personal Finance wherever you get your podcasts.
And now, The Money Show
with Stephen Grootes on 702.
Let's walk the talk.
The Money Show with Stephen Grootes is brought to you by ABSA Corporate, an investment bank, proud sponsor of the African Blockchain Report 2024. Good evening. Welcome to the program. I'm Stephen Grootes. Don't forget the Friday Biz Blitz in around 40 minutes from now. You may want to just sort of brush up a little bit on what we've been talking about over the last week. In a way, a strange kind of day. We keep being assailed, having bad news thrown at us. This is going to affect trade. This is going to affect tariffs. This is bad for our economy. The world is sort of turning on itself. Everybody's in conflict, etc., etc., etc. And yet today we have two bits of good news on a money show. Who can imagine? The first is that the JSE just keeps powering ahead, going past 98,600 points. That's the all share. And the reason is obvious. It's been discussed before, but it's just the way that kind of markets like ours work. Things grow. They don't tend to get smaller. There are more and more people, etc. The value of things goes up. And unless there's a shock or some peculiar thing happens or someone's mismanaged something or just made lots of mistakes or whatever it is, the value would, over time, just sort of keep going up. It's what Warren Ingram keeps talking about in personal finance and why people invest in stocks. That's the first piece of good news. The other may not affect you quite as directly, but I think in the end might have a longer effect, which is that the G20, the finance ministers, central bank governors, they're meeting in KwaZulu-Natal. Interesting to sort of see the international wire agencies and Bloomberg, etc., kind of, spelling KwaZulu-Natal and making sure they got the surname correct. But the news is that those ministers and central bank governors were actually able to come up with a communique. Oh, that shouldn't really mean too much. It does mean, though, that they achieved consensus. Everybody in the room, all of the delegations, which include the US delegation, even though Scott Bessent is not here, had to agree. And now it doesn't use the word tariffs. It doesn't use the word climate change. It does talk about extreme weather events, which is pretty much the same thing. One leads to the other. It does talk about trade, and it does talk about, I thought this was interesting, central bank independence and how important that is. Now, earlier in the week, you heard those stories suggesting that the US President Donald Trump was preparing to fire his central bank chief. That would be Jerome Powell, the prof. But now it would seem that the United States was happy to sign on to this communique, which talks about the importance of central bank independence. So, in a way, that would appear to be two bits of good news to start your Friday.
The Money Show
with Stephen Grootes, live on 92.7 and 106 FM. Streaming on the Prime Media Plus app.
and DSTV channel 856.
Don't forget 011 883 0702 021 446 0567 and voice notes tonight on 072 702 1702. I hope you enjoyed your good news because SAA confirmed last night they made a loss for the 2024 financial year. It lost 354 million rand. Did make a profit of over 200 million rand the year before that, although there seems to have been an accounting error there somewhere. It's also blaming the war in Ukraine and problems with sourcing aircraft, along with higher oil prices, for some of its problems. Phutego Mojapele is an expert in aviation. Phutego, good evening. SAA makes a profit 2 years ago, makes a loss now. Is this just a problem getting out of the starting blocks, or does it suggest there's longer-term trouble ahead?
Good evening, Stephen, and thanks for having me. Look, SAA's problems are really generally about the legacy that was created on the previous version as when they were coming out of the business rescue. They were quite unfamiliar type of conditions that they wanted to get into the market with, particularly around leasing aircrafts and the type of aircraft that they want to operate. And also where they operate in terms of the regional block that they decided to operate in. Conditions in operating those areas are not necessarily as easy as they could be in the country. So, you are going to find, or they are going to find themselves in a little bit of a dilemma there, in a sense that the conditions in which they want to acquire aircraft is not what the lessors would want. For example, you and I will realize that in the past leasing agreements that they had to invoke what we call force majeure because of the conditions of the pandemic at the time. And the fact that most of lessors, they were not able to get what they had invested or expecting from SAA. So when they went back into the market, Stephen, not everybody wanted to or wants to do business with them. And those that were available for them were coming at a higher premium. And also, Stephen, the aircraft that they want, which is Airbus, is not an aircraft that is readily available on the market. They are quite expensive to acquire. Secondly, the Boeing company has problems. Now, when the Boeing has problems, Airbus prices goes terribly high. So they are in a dilemma where they are paying too much. And also the conditions is that they getting into a contract called power by hour, meaning that when the airplane is not flying, is not going to be paid. SAA is not paying. Now, nobody wants to get into that kind of arrangements. That's why they end up with the bad lessors that they find themselves in, that are coming with quite expensive and not favorable for them.
So in other words, from what you say, it actually is harder for SAA to make a profit than other independent airlines at the moment, other independent South African domestic airlines.
Because of the type of conditions of the type of aircraft they are operating. Secondly, they do not have a backup in terms of government guarantee, in terms of the agreements that they enter into with the lessors. Now, the lessors would want to make sure that they will get a return on investment. Now, the airplanes that they have are the ones that are very much expensive. They do make money, Stephen. I mean, I think people should understand that SAA do make profits. There is enough passengers that can keep the airline going. They are operating in areas that really are lucrative. Your Harare, Johannesburg, your Dar es Salaam. Those are the lucrative routes that they are operating in. They are making enough. However, the bulk of the money goes into the acquiring of these airplanes. They are not cheap. The second thing is the fuel in Africa. It's very expensive operating in Africa, and which is largely where they are operating in. So it is some of the issues that they have, but I do think that Prof. Lamola and his commercial manager, they need to sit down and crack the skulls and see how best they can come out of the situation.
So at this stage, SAA are unlikely to need, well, hopefully won't need more government support. I suspect that if government were to be seen to be giving them more money, I think many people in South Africa would probably lose it because they've already had so much.
Part of the conditions of the closure of the business rescue at the time when the SAA version 2 was introduced was that there should not be any taxpayers' money being pumped into South African Airways. And I think those conditions are still there. And I do not believe that we will see SAA getting anywhere closer to Treasury. I do not believe that they will ever attempt to even get to that. That is why you see when Sono trying to get Mango back into the sky, and SAA immediately rejected that because they are focusing on rebuilding the SAA brand. And I do not believe that they will ever go there. However, I do believe that there might be those lessors that would give them an opportunity, but that is if they want to change the model of airplanes that they're operating. Maybe they move into the Boeing. The success of SAF Air is based on Boeing. Boeing is available. They can get 6 aircraft that they want tomorrow morning if they want at a much discounted rate.
Phutego, talking of Fly South Air, you heard in the EWN news bulletin, they're looking at a 14-day strike. This dispute with their pilots seems to be really getting out of hand, if I can put it like that. If they were not to fly for 14 days, would that airline survive that?
Look, South Air has been in a series of self-inflicted pain, which they are going to suffer in the next couple of days. When the pilot's schedule was changed, they should have realized that they are getting themselves into a trouble of not listening to the flight deck, because firstly they changed the way in which operationally pilots should be scheduled, and that really upset quite a lot of them, because we saw the mass exodus of pilots leaving South Air for the likes of SAA and Global, which is operating Lyft and other airlines outside the country. So what is going to happen in the next couple of days, because they do have now certificates to go on industrial action, what is going to happen now is that the airline is going to suffer. Firstly, they are going to lose quite a lot of revenue. As you know, South Air is operating in a very narrow margin, and it's not going to be business as usual. But I do believe that the management of South Air should have not been really relaxed about this matter, because it's going to really cause a havoc in the market. We do rely quite extensively on the South Air routes that are available on our market, and for them to leave it to where it is, I think it's disingenuous for management. They should listen to them and find the common grounds to operate. They are not unreasonable, these pilots that are requesting to be considered as far as increase is concerned.
Phutego, thank you so much. Phutego Mojapele, aviation expert on The Money Show this evening.
The Money Show Explainer.
Well, last night on The Money Show, you heard from both the National Treasury Director General, Duncan Pieterse, and from a Deputy Governor of the Reserve Bank, Rashid Kassim, about what appears to be a decision to lower our inflation target to just 3%. The Finance Minister is the person who makes the final decision. Kassim spoke about the process last night.
The SAB has done some work that says it makes a lot of sense to be at a lower target, and the general view is that this is 3%. And I think that, as Duncan said, Treasury is still finalizing some of the technical work. It wants to look at the consequences of this on the fiscus, and that's where we are at. And let's await the discussion between us and Treasury more formally on it.
That, of course, was Rashid Kassim, the Deputy Reserve Bank Governor, speaking last night. Well, while many people have said they would welcome a lower inflation target, it would keep inflation lower for longer, there is an argument against it. One of the people who's made that argument this week is Casey Sprake, an economist at Anchor Capital. Casey, good evening. Thanks for your time. You, as I understood what you were quoted as saying, said our economy is just not strong enough, I think was the word, to manage this target. Why do you say that?
Hi there, good evening, and thanks for having me on the show today. And this topic of all I think is quite contentious. I'm not the only one that sort of raised concerns, I think, across the broader investment community about it. And it feels like at the moment there's a lot of tension between sort of your macroeconomic stability and your sort of short-term economic flexibility. And I think that the crux at the moment and the real sort of concerns is just the way our sort of local economy is structured. And you mentioned there are plenty of arguments for lowering the inflation target, but there's an equal amount for, to the fact that we're just not there yet. And I think the first and primary argument against it is that we do run the risk of over-tightening monetary policy. So we know, for example, that we are already struggling with, low growth and high unemployment in this country. And a lower inflation target can really lead to tighter monetary policy, because you need to keep rates up in order to keep those inflation levels down. And this can really come at the expense of sort of short-term growth and job creation. And this also runs the risk that the SARB could really become overly hawkish, which really leads to sacrificing economic recovery or intensifying downturns. And there's just a lot of arguments around the way our economy is structured itself with our sort of unique problems that we have.
I'm interested in what you say about sacrificing short-term growth, because so many people make the point And I mean, I think they're correct. If you're ever going to lower the inflation target, this is the moment, because inflation is low and well below the target, or just below the target. And the outlook is that it will stay like this for some time. Let's hope. But you're correct. Also, the timing argument could, I suppose, be made. We haven't had economic growth for, let's call it 15 years. People are very angry, very frustrated. This would be the wrong moment to prolong that kind of lack of economic growth.
Exactly. I think, Christian consumers and the business community at large at the moment are calling for lower rates in order to get that money, sluicing right through the economy again, and to make the cost of borrowing cheaper. That means companies can expand and, local companies can reinvest into the economy. And I think on the note of sort of inflation, yes, we are at the point where it's the lowest it has been for some time. But even the own SARB's forecast at the moment is looking at inflation starting to tick up. So, I mean, at this point, we're looking at it averaging at about 3.2% for sort of this year into next. And then we're starting to look for it to uptick back up to the 4% bar, and that's within the SARB's own inflation targets. But I think the crux at the moment, and where this whole debate is quite complex, is there's just a lot of questions, I think, from economists across the board at the moment around the modelling assumptions from the SARB. So, there's an argument saying that the SARB scenario it's overly optimistic. They're expecting sort of fast alignment of expectations and no shocks around this. And what that really means is that in order for this lower targets to take place, there needs to be buy-in from the community at large, and this belief, for example, that inflation will stay low. But that's very difficult in an economy like South Africa, where we have different sort of price-setting behavior around wages, around our trade unions, for example. And I think second to that, much of our inflation in this country is supply-side driven. It's not demand-driven. So that means what keeps our inflation sort of high is things like administrative prices. There's taxes attached to fuel, etc. That's not coming down anytime soon. Also, questions around our energy costs, food prices, logistics, and these are factors that aren't easily influenced by interest rate changes.
Well, I was going to say, I mean, that would be a big part of the argument about it. Just look at electricity prices and how high they've got, council prices from local government, things like that. And what that would mean then is that you're sacrificing economic growth by keeping interest rates high simply because councils and Eskom are charging higher prices. And people probably wouldn't accept that outcome.
Well, it's precisely that, and that's where a lot of the question marks are at the moment, and why there's been so many queries around the SARB's sort of modelling on this. Again, we mentioned that model coming out from the SARB, where they're saying that no, we can keep inflation low, and as a result, we'll be able to keep that sort of interest rate environment low because there's going to be this buy-in from the economy. And as I said, the flip side of the argument is that no, structurally we are in a very different scenario than what we see from a lot of our developed markets, sort of peers and other emerging markets, and that's really sort of where the crux at the moment. And I think important to add to that is that monetary policy itself can't work in isolation. So without sort of coordinated fiscal policy coming from the government and sort of the structural reforms that we need, simply tightening inflation targets can actually be counterproductive, and that sort of feeds into this argument. And I think at the end of the day, it's becoming a bit of a distraction from sort of the real reforms that are needed in our economy to sort of boost supply, reduce our cost pressures and improve productivity.
You remind me a little of the governor, Casey. The Mojapele makes the same speech almost every time. We need proper reform.
Yes, becoming a bit of a stuck record, I'm afraid, at the moment.
Indeed. Casey Sprake, thank you. Really appreciate the time. Economist at Anchor Capital. The case against the argument against lowering the inflation target. I've made the same point many times. It's a point that I've seen being made by other people before me, particularly Professor Raymond Parsons, who was playing a role in the decision to adopt inflation targeting in the first place back in the year 2000. There's been, from what I can see, at least from where I sit, very little public consultation about this. And while I think on balance it's probably a good thing to have a lower target, you do need legitimacy, and for that you need buy-in, and for that you need consultation. It is, though, a very difficult political environment, and I could understand the reticence to go down that road.
The Money Show.
The markets.
Viv Govender's portfolio manager at Rand Swiss. Viv, good evening. Thanks for the time. Another record day for the JSE All Share. Despite everything that's going on, the market just keeps tracking.
Yes, that's true. I mean, look, we've obviously lagged especially U.S. returns for multiple years. And it's nice to see us, catch up. In fact, despite the fact that the U.S. is also hitting all-time highs, in the recent past, we've actually outperformed them, and that is, obviously a good thing to do, especially when you look at just how out of favor local portfolios have been among investors over the last few years.
Why is it that we're outperforming them? Is it just still the kind of coalition rally from last year? I presume that gold and platinum, particularly gold, have played a big role in that.
Yeah, of course, platinum is also playing catch-up, but I think one of the best arguments I've seen around that is the idea that, eventually people realize that platinum is also a precious metal, and you've got to look at that from that point of view. This is a substitute for gold. You can't have the gold price, more than 3 times the platinum price without some kind of adjusting really what people are using. But I think, we are seeing a bit of recovery from this. But also, after the GAU, we saw, a recovery in our SA Inc. stocks, which is obviously a big positive for us. And, if you look at, for instance, the financial sector is up over the last year. We see the industrial sector also benefiting, some recovery and things like that. That's also,
right.
The overall economy started looking a lot stronger after the year. But the talk of things like cruise is quite positive for the country.
All right, Viv, I am going to ask you just to talk as loudly as you can. It's not a very strong line tonight. Valterra Platinum up very strongly, despite really saying that their first half of the year was going to result in a much reduced profit. But that, I presume, was really about a stronger platinum price.
Yes, most certainly. We've seen the platinum price recover quite nicely over the last few months. Valterra, of course, the history looks a little negative. Not only are they suffering from, lower platinum prices, platinum group metal prices, but also the volumes were a bit down. But if you look at the platinum price, at the moment, it's basically up year to date 60%. And I really think the fact that, there is a break-even level at which these guys actually start making money for the first time. The improvement of 60% is even more significant when you consider a large chunk of that. The price is going to be just towards cost. So these companies are seeing massive improvements in profitability, and that I think is what's really resulting in this thing going forward. Yes, in the past these companies obviously had difficulties in the last quarter as well, but I think looking at the platinum prices right now up in the last 6 months, like I said, 50+%. It's probably going to result in significantly better results in the next earnings periods.
And then, would you buy platinum or would you buy a gold share right now, Viv? Both are very, very strong. Both are moving up. Well, platinum used to be more expensive than gold, of course. Which is the greater room for growth? Would it be platinum?
Look, I think platinum is more of a bit of a catch-up because the gold price is as strong as it is. Unfortunately, I think some of the longer-term factors around platinum, especially the amount of demand that goes towards things like catalytic converters, is probably going to be, weakening faster than most people anticipate. I always put forward the idea of Waymo at the moment. If you look at Waymo in San Francisco and other parts of the world, in other parts of the U.S., it seems to be that they've solved the problem of self-driving vehicles. If that is the case, electric vehicles are going to take off at a far faster rate than people anticipate. And remember, a huge part of the platinum demand comes from its use as catalytic converters for fossil fuel-driven vehicles. And I think that is the industry that's in decline. So there is a short-term upside to platinum. But I think longer-term is probably gold that's going to be driving things.
Viv Govender, thanks very much indeed. Portfolio Manager at Rand Swiss, bringing the time to 6:30.
Travel isn't just about destinations. It's about the people you meet, the cultures you immerse yourself in, the stories you carry home. I'm Relebogile Mabocha, and on my travel feature, I take you on a journey beyond the guidebook. Each week, I connect with fellow travelers, insiders, and storytellers to bring you the heart of every place. Whether it's a hidden gem right here in South Africa or a dream destination abroad. Join me as we travel through conversations, memories, and inspiration. Listen wherever you get your podcasts.
702. Stephen is on The Money Show.
6 to 8 p.m.
Well, good to hear from you this evening on 011 8830 702 and 0214460567. I'm about to make some comments about an industry I work in, so just be sort of just understand the context in which I say them and realize that I'm not approaching them completely objectively. But there's plenty of stories. First Business Day this morning, and then I think Fin24, both very comprehensive reports around changes that are being proposed in a white paper published by the Communications Ministry. And they would make various changes, including to the industry of radio, which would involve around, they would sort of scrap current ownership limits around AM and FM stations, could have all sorts of implications, all very interesting in lots of different directions. There's also talk around streaming services and sort of for the first time a kind of attempt to manage or regulate or I suppose in some way just administer streaming services. So for the moment, as I understand it, if you broadcast something, if I say a rude four-letter word or something, you have a place where you can actually go and complain. If it's on a streaming service or if you're libeled or something, it's actually much harder to do. And streaming would not just apply, by the way, to something like Netflix or Showmax. It would also apply, I presume, to YouTube, to podcasting, all sorts of different directions that this could move in. And basically, this seems to be an attempt to sort of move things along, basically catch up. I did wonder if maybe in some ways it might be much harder to catch the horse now than it's bolted. I think it probably will be. And there'll be other people who are doing other things in different countries that perhaps we could learn from. What I did like about it was that at least someone is now trying to catch up with reality. It is one of the great sadnesses and I think one of the great dangers here and in other countries that we're starting to see a picture where everybody watches and listens and reads material that is just so different to everybody else that you have no idea what everybody thinks. And that's one of the great risks of the kind of current transition that we're in. I don't think government can do much about that, by the way, and we might be asking too much of a white paper. Either way, it's still going to be very, very interesting. I'll give it a full read sort of over the weekend and just see what else they have to say. But I did find the idea that there's a white paper that it'll deal with streaming very, very interesting. Your thoughts, 011 8830 702 021 446 0567.
The Money Show.
The Friday File.
The Friday File.
Well, I know next to nothing about fashion and clothes, and I know it's kind of sometimes fashionable for people like me at my stage in life to say things like that, but I find the industry really, really interesting. Some people are able to stay fresh, cool, hip, I mean, listen to me, and manage to do that for a very long time. Some find that a little harder. There's an awful lot going on behind the scenes in terms of supply chains. Look at all the panics we've had over Shein and Temu sort of coming for the rest of our textile industry after what happened in the 1990s. Well, one brand that's done incredibly well is Nje. That's Nje with an exclamation mark. And Bonolo Zwane is the owner and managing director. It's really all about her. Bonolo, good evening. Thanks so much for joining us on The Money Show tonight.
Good evening, Stephen. Thanks for having me on this Friday evening.
There are so many different fashion brands in South Africa. I often think that to try and stand out must be quite difficult. To sort of stay fresh, to be able to, I don't know, do you stand for something, to send a message through what you're designing?
I'd love to believe that we do. And I think we've been around for almost a decade now. We're in our 8th year of trading. And hopefully that says something about what we've been able to do in terms of our staying power, throughout the different trends and seasons and even sort of economic challenges and movements that we've seen, structural shifts that we've seen in the industry. On the manufacturing side, we manufacture our product ourselves as well as on the retail side. And like you mentioned, on the distribution side and logistics, it's been quite eventful for the sectors that we're playing in. And I'd like to believe that from a point of distinction, we stand really for a brand and a proposition that speaks softly but stands very boldly. So if you see our type of clothing for women and for men and kids, it's really sort of distinguished by a minimalist kind of elegance and what we'd love to call a silent punch. We've got very unique design features in our clothing, but they don't compromise on the quality. So they've got really high functionality in terms of living in them day to day. So we really make everyday wear and it must be ready to wear, like you would get from, your mass retailers. If you like something, you click on it online and it should be with you within a matter of days.
I'm not a sort of creative person in that way, but the sense of designing something, I don't know if you're able to sort of put your philosophy, maybe attitude in words, or if it's something that you need to sort of have in front of you and say, there, look at that.
Well, I think you're speaking to the right person because I actually don't have any formal training in design. I think the way that I could describe how we translate almost our DNA into a garment is we like to think about the things that appeal to us. So myself and my business partner, when we conceived the brand about 10 years ago, we were really sort of drawn to items that were versatile in nature. So like think of an item that you can wear, can transform your look for different occasions and for different moods. You don't have to really wear a different piece of clothing. You can wear the same type of clothing, and just with like an unzip or a zip of a hem, it completely transforms to something that's a little bit shorter or longer, or gives you a different silhouette or a shape. So the way that I translate what I envision in my mind in the, if you like to call it the design process, is I sort of sit with our pattern maker who will put down what you can think about it as a main frame of a garment, a very technical kind of drawing of a garment. And I really sort of verbally tell them what I would like to see. And I scour the internet for maybe a slit that looks like the way I envision, or a cuff that looks like the way I envision. And then I make a little attempt at drawing that, and it all comes together. So it sounds like quite a bit of a process. But once it's done, it's really something, because it's a lot of the costs that go into making a garment are those type of upfront costs that deal with the upfront processes. And once you have that right, you can sort of run and produce a number of items just from that one main frame, and it sort of amortizes your cost over time, and you can have a very sort of cost efficient business over time.
I mean, I didn't want to jump into costs straight away, but in an era of fast fashion, Shein and Temu, who seem to, I mean, maybe have gone off the boil a little bit, maybe the de minimis change or something. But obviously you have to really manage costs very, very tightly. You say you design, you produce, you distribute them here. All of those things are things you now have to manage. So there's a lot of time on very boring logistics rather than actually designing the stuff.
Yeah, I mean, when I started this business, I didn't really think of it as a business, and that's got its good and its bad points. It was more of a passion project. And I would say 2 years in, you sort of bump into some of the mistakes that you're making. And I spent time with veterans in the space who manufacture for large retailers and sort of try to understand where we could improve. And that process, what that taught us is that we would need to spend a little bit more time on digitizing certain aspects of the manufacturing process. And the one that I spoke to earlier, which deals with the upfront costs and making a pattern and sizing, or what they call grading, just generating reliable sizes. And for an online store like ourselves, it's important because, Stephen, we want to avoid returns and exchanges. And so we digitize that right up front. And so the sort of more manual labor intensive dealing with the physical hands sort of comes into our sewing and the work that our seamstresses do, because we still want to keep quite a substantial bit of the manufacturing within our borders.
So one of the things that some people literally do, I mean, one of the things that Shein and Temu do compete on is actually the speed of design.
Correct.
Your garments, I presume, are designed to last a lot longer than theirs. But the speed of design must be quite an interesting aspect in a company like yours. It's not something I've ever thought of. I mean, I've never really thought of how long it takes to design a garment. But is that becoming more of a factor? I mean, it's fast fashion.
It's absolutely a factor. And, it's got to be balanced with, like you alluded to, the sustainability of that design, because we can't really compete with having, more frequent seasonal changes. Even the concept of season is changing within the fashion space, and doing it faster than is reasonable. So you've got to find a balance between really meeting your customers, sort of demands for changes in sort of seasonality, and also for the clothing item getting to the door as quick as possible. And I'd like to think that as much as on the design side, we've got to introduce more speed, and the digitizing aspect of the design process definitely helps with that, because if you want to make a little tweak, you don't have to go to, a cardboard of a pattern and redo it or change this and that manually. You can literally change it on your PC or on your phone. That really helps. But I'd like to think that we would, given our current construct now, not be able to compete from a design speed point of view, and probably not even maybe want to with the likes of the sort of retailers that you mentioned. But where we would really need to gear up and step up is how quickly we can get the product to the door. And also when it comes to post-servicing, post-sale issues, how efficiently, quickly, and openly can we service the client once the garment has reached the door as well?
How important is sort of quality for people now, do you think? I mean, I would imagine for people, anyone buying your brand, and your label is going to want something that is durable, that lasts for a long time. That means that it's got to be designed in a particular way, but it also means it's got to be created and put together in a particular way.
Sure. I found that it's different, for different subsets of people and what they're needing at a point in time. So if they're, for example, going to a year-end function and it's a theme-based year-end function, they're not really going to be sort of willing to spend a lot of money on something that they're only going to wear once. So I think that's the space that a lot of mass retailers can play very successfully in. And I'm saying all else being equal, not talking to sort of disposable incomes and things like that. I'm just really talking to preferences, like shopper preferences, assuming that they can afford what we sell. And then you've got the ones that really want to buy something to last. So let's think about you if you wear any shirts. I don't know if you wear any formal shirts or a smart casual shirt. You sort of want to wear your white sort of smart casual shirt as a staple shirt for quite some time. So quality then becomes something that's important to you. It's still got to be at reasonable value for spend. And if you're like a type of clientele who like a little unique design feature, then we'd probably be the kind of, retailer or manufacturer you'd be looking for.
Bonolo, really enjoyed talking to you. Thank you so much. Bonolo Zwane is the owner and managing director at the fashion label Nje.
702. Stephen is on X.
At Stephen Grootes.
Time now for the Friday Biz Blitz. You know how it works. If you get the answer correct, you phone us on 011 8830 702 021 446 0567. If you get the answer correct, we move on to the next question. If you get the answer wrong, we move on to the next caller. It's a very simple solution. The chair of the U.S. Federal Reserve, Jerome Powell, this is your first question. Jerome Powell was appointed to that position by which American president? Who appointed Jerome Powell?
The Money Show.
With Stephen Grootes, live on 92.7 and 106 FM. Streaming on the Prime Media Plus app.
And DSTV channel 856.
On the next Money Show, Mbali and Klapo joins us as our special How I Make My Money guest. She's a renowned housekeeper and cleaning influencer known for her cleaning tips and services. Ian Mann, our book reviewer, MD at Gateways Business Consultants, goes through another fascinating book that you should be reading, not just on your shelf. It Distinguishes by Professor Sandra van der Merwe, now at Gibbs, formerly IMD and Imperial College Business Schools. Also, all of the top business news of the day.
Travel isn't just about destinations. It's about the people you meet, the cultures you immerse yourself in, the stories you carry home. I'm Relebogile Mabocha, and on my travel feature, I take you on a journey beyond the guidebook. Each week, I connect with fellow travelers, insiders, and storytellers to bring you the heart of every place. Whether it's a hidden gem right here in South Africa or a dream destination abroad. Join me as we travel through conversations, memories, and inspiration. Listen wherever you get your podcasts.
The Money Show with Stephen Grootes is brought to you by Absa Corporate and Investment Bank, proud sponsor of the African Blockchain Report 2024.
The Money Show, Friday Biz Blitz.
011 8830702 021 4460567. Jerome Powell, the chair of the U.S. Federal Reserve, was appointed to that position by which American president? Is it Dino in Mondior? Dino, hi.
Good evening, Stephen. How are you? Yes, it is Dino. It was Donald Trump.
It was Donald Trump, Dino. Yes, you're correct. Okay. Speaking of Trump, he said this week he has struck a deal with Coca-Cola to replace sugar corn syrup with which plant?
Sugar cane.
It is indeed sugar cane, Dino. Yes, sugar cane. So Coca-Cola uses corn syrup. Trump claimed that he had convinced them to use sugar cane. Okay, here's the next question. Here we go, Dino. Question 3. What is the term for a sustained period of rising stock prices, often driven by investor confidence and strong economic indicators? A sustained period of rising stock prices. What is that called, Dino?
I would give it inflation.
Sorry?
Inflation.
It's not inflation. I'm sorry, Dino. Let's go to Faisal in Houghton. Faisal, hi. The term for a sustained period of rising stock prices.
Hey, Stephen, hi.
How's it,
it's a bull run?
It is a bull run, Faisal, yes. It is a bull run, and we hit a new milestone this morning, the JSE going past 98,600. Okay. Satoshi Nakamoto is credited with creating which decentralized currency?
Hey, Stephen, that's a Bitcoin.
It is a Bitcoin, Faisal. I can see you know your stuff. In 2009, he'd written a white paper titled On the Idea of Bitcoin in 2008, and this week, Bitcoin's traded above 120,000 US dollars. Okay, here we go. Next question. Professor John Lamola is the CEO of which aviation company, Faisal? Faisal, come on.
No.
We were talking about it earlier.
I'm going to take Safair.
Oh, you're very, very close. I'm going to give you one last guess. You are very close.
SAA.
It is SAA. Faisal, okay, congratulations.
So Thank you.
Thank you. Congratulations. Faisal is the winner of the Friday Biz Blitz on The Money Show. Good evening. It's 7 o'clock.